Trifast is a request. So let's have a look at Trifast. There we go. Trifast. There we are. It's ranked 114, and it's edged up a little bit from 115. So this is an interesting company. Not, but I said that in a nice way. As we all know, boring companies sometimes. What good business to invest in? You want predictability. You want boring. You don't want crazy volatility and excitement. But anyway, Trifast is a leading international specialist in the design, engineering, manufacture, and distribution of high-quality industrial fastenings and Category C components for principally the major global assembly industries. Let's have a look what they do, shall we? Oh, it's very interesting. Fasteners, these kind of things, nuts, bolts, fasteners. Everyone needs those. Everyone. Look at that. Lovely. Fantastic. We are the best in the industry. But sometimes that's good, you know? That's like you want predictable businesses. So let's look at the tail of the tape here. It's 73 pence is the share price. Target price 113, upside 54, 55%, let's say that. Market cap 98, enterprise value 136. So they've got a bit of debt there. We can see that net present net asset per share, it's above the share price. Average daily volume, decent, 100,000. So it's, you know, it's quite liquid for a small company. Revenue 244 million. They've been an operating loss of £8,000. Not too worrying. Cash of 31, debt of 69. Operating cash flow 2.9, let's call it 3. Free cash flow of 2.5 million minus. No, of course, dividend. So the interim results, or the latest results, let's check on Try. Oh yeah, trading update there. So worth looking at that. Against the backdrop of continued subdued demand, the conditions in a number of geographic and end market sectors, Trifast's trading performance in the final quarter was resilient. Final quarter, and supported by self-help initiatives launched during the year. As a result, the group's revenue and profitability for the year are expected to be marginally ahead of guidance. Indicates what's the guidance? They say so. Consensus guidance, what is not 230 million revenue, EBIT, which is operating profit 11.5, adjusted profit before tax of 6 million. So that's obviously an improvement. So keep that in your head. 11 million, 6.8. So okay, so so we can see here the value is good. So we got, you know, on the half year, operating profit growth. It's going up. Health is questionable. Yeah, we got growth, value, momentum, no. So that means the chart, maybe it's a recovery play then. There's no momentum there yet. Health, free, efficiency, no. Potential, yes. Okay, gross margins, yeah, 25. Yeah, manufacturing business is, you know, going to be low, pretty much. Broker targets there. Okay, so they're saying 230 million, they reckon. And they're going to be making what? 6 million profit before tax. So they made a loss there of 2.6 last year. Oh, we got a recovery play on our hands. So let's scroll down to the forecast. So the top line is going down, but the margins, look, they're improving. That says to me this cost efficiency is happening. I did sort of read through this, and I thought, you know, maybe this is the recovery play. And slowly the margins are improving here, but you know, the bottom line here, quite thin margins. But I put this on a sales multiple of 0.6, EBITDA 6 times, and a post-tax 12. Maybe it's, I got 35%. What have they got? 54%. So let's look at the chart. Trifast, TRI. So you can see where it's come from. This is going back to 2018. It was 280 a share, and it's come all the way down to 72 pence. And you can see here 3 states of a chart. Sorry, I can't get my other finger up for some reason. 3. Quite worrying, isn't it? I can't do 3 on my finger. But you can see here. Let's look at the 3 states of a chart, okay? Oh. So this is an obvious uptrend, isn't it? See, that's an excellent run that's had, isn't it? And oh, look at this. It's pretty much the range. Like, you know, with dips in it, yes. Pretty much a range where it didn't break above that level. I said, you should be careful of a range, of buying a range. You buy the low here, and you may have a good one. Then you can buy the low here again, and it could go down, and like that. But then it broke 200-day moving average, all right? And we started seeing, higher highs, go up here, higher highs, all the way up, higher lows. And then at the top of the market, look, what we had was this lower high. Never made another thing there. And it sort of bounced here, but then it resumed trend again, downtrend again. And I don't know what happened here, but there's obviously some bad trading updates. Went from 190 to 89 pence a share. This is why sometimes, you need to limit the downside because you don't want to be sitting on that. And we've got sort of, maybe it rallying again. High. That's a lower high. It's come back down. And now we're back into this sort of messy range and you can see here pretty much previous resistance. If I zoom in here, previous resistance there broke down, keeps trying to break it back down, gapping down, trying to break above it, keeps gapping down here. And so, first of all, I put an alert here. I think it's not gone above sort of this level 81. It may 82. Let's put an alert on 82. Add alert. Try recent high. District high. So that'll just be a warning there. And maybe on the 200-day as well. Because no, I want to get above that. So that's in a range now. You want, and that can happen for a while. It'll go along and on, and then you want to get back into uptrend. Anyway, what's your thoughts on Trifast, ladies and gentlemen of the jury, the watchlist ignored jury? Trifast. SE, no. Gareth, try a no. Too much debt to service and a horrible chart. It is, yeah. It's messy. Maybe what's the liquidity on it? We did say average daily volume 113. It's not too bad, So I don't see why it's so. Okay. Try no. Rob, what revenue was it? Trifast used to be good company, maybe recovered play. Yes. That's my thoughts. They are, again, we've mentioned this a couple of times. When you go through hard times, companies tend to sort of, look at costs and efficiencies, and they come out of a recession, they're better for it, or they're out of a downturn or a rough patch, better for it, because competitors have gone bust, and they've laid off work staff as well. So, anyway. Great. That share is held by a Rockwood Strategic. I think it's interesting. So, one for the watch list. Thank you, C. Craig. Second being it. C. Craig. I think it's okay. Mark V. TR1. Watch list for me. Ed. TR1. Yeah. I tell you what, this is split an opinion, isn't it? Give it time to sort of debt out. Brian says there. But I'm thinking try is one for the watch list. It's been a previous good stock. Will they revisit that? Will they get back, reclaim that future glory? We'll see.